that last year ACCA signed an MOU with SECP on the Jama Punji initiative. And under that initiative, we've run multiple campaigns and multiple trainings during the last year and quite a few trainings this year as well. And today we've selected a very, very important and interesting and a new topic, relatively new topic for all of you, which is the real estate investment trusts, REITs. So without any further ado, since we have limited time for the session, without any further ado, I will hand over to Mr. Hassan Zaidi, who will take us through the presentation. I'll appreciate if you can start typing in your questions as they may come along. And from time to time, or just as one concept is over, we will take a quick break. My colleague Junaid will ask questions that the members would have put up, and we would request you to give answers. But during the question-answer break, I would appreciate if you can stick to the point and wait for the presentation to be over. If you still have questions left over, we will hopefully look at them towards the end of the session. The session is going to go on till 5 o'clock. I think we'll take a break for namaz in between. Yeah. Okay. So 5 minutes break for namaz, and that's when you'll get a breather as well. Otherwise, it's going to be two long hours. So we will take a namaz break in between, and after that we'll resume. Towards the end of the session, there will be a longer question and answer break where you can put up most of your questions. So thank you very much for joining in once again, and over to Mr. Muhammad Hassan Zaidi.
Thank you so much, sir. Bismillahirrahmanirrahim. Assalamu alaikum, dear colleagues. It was always a very humbling experience to come back to ACCA since I qualified ACCA, and it's always good to share whatever I know with my colleagues. So today's presentation is part of SECP's initiative regarding investor education. We have a dedicated investor education wing, and current presentation is held under this investor education wing annual program. This presentation is about real estate investment trust, REITs, which is a relatively new concept. Before we start with the presentation, may I just remind you that REITs is something different from a real estate development company or a real estate financing company, because many people confuse the three concepts. A real estate financing company is a company that gives you mortgage finance. A real estate development company is a company that develops a real estate project for you, whereas the real estate investment trust is basically a mutual fund, and this mutual fund will invest the entire savings it gets into some real estate projects. These real estate investment trusts are modeled after the mutual fund model as we have in Pakistan. So we have the management company, and the management company then launches various REITs projects under the umbrella of the management company. So defining REITs, going by the book, yes, it is a highly regulated and disciplined corporate structure to pool funds and to undertake real estate development and the investment activities. The ownership of the real estate project rests with the owners who have come to buy the real estate investment trust certificates or the units of a real estate investment trust. So this is a brief chronology of evolution of REITs since 1960. In 1960, REITs were the concept was first introduced in the USA. In 1969, first European REITs legislation was passed. 1970, we had this first healthcare REIT listed on the New York Stock Exchange. Now, the healthcare REIT is a specific class of REITs. Basically, these kinds of REITs will be investing in the healthcare projects only. In the Western world, we have hospitals, convalescent home, nursing homes, and even old age homes. And all of these projects, the real estate projects, are financed and the investment is taken from a housing REIT or a healthcare REIT. In 1993, we had Canadians REIT debut, Japanese REIT came in 2001, 2003 French REITs, so on and so forth, and in 2014 REITs regulation, 2008 REITs regulation was introduced in Pakistan, and then in 2014 this REITs regulation was introduced in India. So currently we have REITs regulations operating in around 40 countries of the world. So coming to REITs in Pakistan, the current regulation is Real Estate Investment Trust Regulations 2015. We had a REITs regulation promulgated in the year 2008. The REITs regulation was overhauled in the year 2010, but the 2015 regulations are a modification of our 2008 regulation, and the 15 regulation is basically more relaxed. It gives way more incentives to the investors, and it is as you go through various clauses, you'll see that the requirements have been encouraging towards the investor. So currently we have 4 companies in Pakistan which are real estate investment, having license of a real estate investment trust launching. We have Arif Habib Dolmen REIT, AKD REIT, and IC Towers, and SB Global REIT Management Company. So the next slide is about how do REITs work. Basically, the idea of REITs is very similar to the idea of a mutual fund. Public and private investors, they pool their fund into a REIT scheme, and the REIT scheme, the trustees purchase the real estate property, and the entire money is invested from the trustees to into the scheme, the real estate investment trust, and the dividends are handed over to the investors. In Pakistan, all REIT projects are required to be listed on the stock exchange, which is the Pakistan Stock Exchange. Type of REIT funds in Pakistan, basically we have 3 kinds of REIT funds, where there are the development REIT schemes, the rental REIT schemes, and the hybrid ones. The development REIT schemes are basically aimed at developing a real estate project from the amount which has been gathered by the real estate investment trust. A rental REIT scheme is a bit different from a development REIT scheme because a rental real estate REIT scheme will invest the entire amount of its fund into a rental project, and the rent received from the project will be distributed to the unit holders. In the 2015 regulations for REITs, we have separate requirements and separate set of documentation which is to be furnished while developing or while getting an approval for a REIT scheme. We now come to the REITs regulations 2015. Basically, the structure of real estate investment trusts in Pakistan is such that you have a real estate REITs management company. The REITs management company first incorporates itself as a company, and then it goes to take license for a real estate investment, for launching a real estate investment trust scheme. There are minimal capital requirements. 50 million rupees is the minimum paid-up capital requirement for any company that intends to launch any real estate investment trust schemes. 5% of the units for a REIT scheme are to be held by the REIT management company. So it is like the management company once it gets a license, will be launching multiple REITs projects, and every project will be launched separately, just like a mutual fund. And for every project, each of the REIT scheme will be registered as a trust, because again we have the company and the trust structure in Pakistan. We have the management company, which is running the REITs, and we have the REITs, various REITs launched by the company, which are various trusts registered as trust, and they are then launched into the market. So each REIT scheme which is launched, each REIT trust which is launched by a real estate management company has to have 5%, the 5% of the units are to be held by the REITs management company, which is the parent company which is launching the REITs scheme. And minimum 20% units are held by a strategic investor. Strategic investor is someone who will be buying the REITs units initially at the time of launch, and he will continue holding the REITs units until the scheme comes to an end. Yes, the strategic investor can quit and another strategic investor can take in his place. We can also have multiple strategic investors in a REIT scheme. Each of the strategic investor has to have 5% of the total REITs units which are floated by that very scheme. The idea of having a strategic investor is to bring in uniformity and to bring in a certain structured form, and to bring certain stability into the entire scheme, because 20% units held by a strategic investor, 5% held by a REIT scheme, means that 75% of the REITs unit are then launched with the public for investment. Minimum size of the fund is according to the stock exchange listing regulations, because all these funds have to get listed on the stock exchange, so we have to comply with the listing regulations as well. REIT schemes are allowed limited unsecured borrowing. There is no secured borrowing. The borrowing is just unsecured, and limits have been prescribed, which are very minimal. The REITs, this enforce discipline, transparency, control through trustees. Now, trustees are the people who are actually launching the REIT scheme and who are actually purchasing the property, and who are behind the entire scheme, and people who are running the show. For rental REIT, minimum occupancy rate is 80%. Okay, so one difference between residential REITs, between tenancy REITs and development REIT, is that for development REIT, the real estate development company develops the real estate project, but for a rental REIT, the project is already developed. The real estate investment trust gets hold or gets ownership of that project. The various units in that project, be they shops, be they apartments, homes, they are rented out, and the rent is then distributed amongst the various unit holders. REIT management company can charge a minimum flat fee. Yes, the fee of a REIT management company would depend upon the performance of the REIT. It is always a percentage for of the fund which the REIT management company gets as its management fee. This is a flow diagram of REITs regulations 2015. Real estates approved by SECP. Once the real estate management company gets an approval by the SECP and gets a license to function as a REIT, it then launches various REITs. There are the trust deeds, approvals, and their submissions to SECP. Once a particular project gets approved, they can then go for transfer of property. And once the transfer of property and other requirements are complete, they can then go and offer these REITs units to the public. Opportunities and challenges, as we all know, They bring about improved scalability of the project. They enhance profitability. They create greater market confidence, and they create disciplined project and risk management through adherence with specs, enhanced due diligence, supervision by development advisor, involvement of independent trustee, accountant, rating agency. Basically, these REITs regulations 2015, which is the current regulatory framework for REITs, are very elaborative, and they provide elaborate details for people to be selected as trustees, accountant, the rating agency, the auditors, and the project which is to be undertaken by a real estate investment trust. So as a REITs can play a hugely significant role towards government economic objectives. They will document the largest asset class, which is, of course, the real estate in Pakistan. They will seem to bring about greater transparency in real estate, because every project which a real estate trust can invest has to have very clear titles, and everything has to be documented, everything audited, and everything has to be very transparent. Of course, they will provide employment opportunities, and they will trigger activities in several manufacturing and services sector as well. They will enhance public franchise and improve and build the environment through innovation and so on and so forth. Another benefit of investing in a real estate investment trust is the improved planning for real estate development, which will dampen the boom bust cycles of a real estate industry. Investment in either development or in rental REITs would seek to bring about greater uniformity and greater. It will like even out the boom bust cycles. And of course, real estate is holding is converted into a liquid assets. Many people come to hold that asset, so people can always sell their investments. These investments are always traded on stock exchange, so they can always go to the stock exchange, sell them, or they can even buy them. So units of rental real estate are an ideal investment avenues for people who are retired, companies, pension fund, because they ensure a steady flow of income. And of course, they will deepen the capital markets as well. Certain challenges which we have to REITs in Pakistan. Yes, we have an overwhelming domination of the informal sector in the real estate investments. Business economics are driven by prevalent practices which sometimes are not very transparent or clear. Inauspicious tax regime and high yield of government securities. So we have a case study about South Asia's first listed real estate investment trust scheme. It is about Dolmen City REIT, Karachi. This is one REIT scheme which was approved by SECP, and it is still working. It's a success story. The name of the scheme is Dolmen City REIT. Nature is perpetual, rated, listed. It's a closed and Sharia compliant scheme. Most of the schemes, REIT schemes in Pakistan, are closed-end schemes. Project real estate is Dolmen Mall in the Harbour Front, Karachi. Leasable area is 547,000 square feet for the Dolmen Mall and 256 square feet for Harbour Front. Fund size is 22,237 million rupees. CDC is the trustee, and it has been rated as RR1 by JCRBS. Occupancy rate, Dolmen Mall is about 95.58% and the Harbour Front is 100%. Net asset value as on June 30th, 2015, which is the closest date, to the launch of the scheme, it was 10.2 rupees per unit, and we see it is on June 30th, 2018. The net asset value is 18.99 rupees per unit. So we have an appreciation of about a double. The unit has almost appreciated to double its value. Dividend yield in the quarter ended June 2018 was 3%, annualized 2018 it was 12%, and for first year 2016 it was 10.4%. Annual rate escalations is 10% weighted average rate of rent growth as per existing contracts with the tenants. So this brings us to the end of presentation. I would welcome any questions if you have.
Is there are a few questions from the audience? I'll read it out for you. Mohammed Kashif is asking, who is a strategic investor?
Strategic investor is somebody who is investing 20% in any REITs fund. Essentially, it might be like a foreign investor, or it might be a bank or a financial institution. The idea is just to bring certain stability in the entire REIT scheme, because 20% strategic investors means that 20% of the REIT scheme units will always be held by a single or 2 or 3 persons or class of persons, so as to bring more stability. And this strategic investor will only be getting back its units, or be redeeming his units when the REIT project comes to an end, be it a development or a rental REIT.
Okay, fine. Wakar Alam is asking that the REIT guidelines were introduced in US in 1960. Why did other countries like Europe and Pakistan took long time to adopt their own REIT guidelines?
This one is interesting. I can safely say for Pakistan, as of today, we only have one functional real estate investment trust, which is traded on the Pakistan Stock Exchange. Basically, the real estate sector itself is informal, may I say shady, and the real estate, in any investment made under real estate investment trust, has to be very transparent. We have proper and elaborate procedures, guidelines as to who will be the valuer, how will the value will be assessed, what will be the title of the property, how the property title clearance will be obtained. So it basically demands a lot of transparency, and everything has to be in black and white. So by that token, you see, REITs were introduced in Pakistan in the year 2008. We only have one real estate investment trust coming in Pakistan. So it is, I think, the public is not interested in going for real estate investment trust scheme.
Okay, perfect. There's another question from Mohammed Kashif. He says, I refer to point number 4 of slide 11. Why scheme should borrow when it is already financed by a strategic investor and general public?
Yes, we do understand. You have a valid point. The scheme must not borrow. That is why we have the unsecured creditors. The scheme can borrow certain funds for its operational activities. We need to be very realistic about this. There might be situations in which a real estate investment trust is short of cash or money, so it needs to bring in more money. So, and we have very clearly stated that any borrowings will not be secured borrowings. There will be unsecured borrowing. So effectively, we are discouraging borrowings, but we have to keep space for any future consequences.
There is another question for Umar. He is asking, is the scheme halal?
So long as it is Sharia compliant, it is always halal, because we only get a license for a Sharia compliant scheme or a Sharia compliant fund through a board of muftis, and in order to qualify for the scheme to be halal, the scheme has to be it has to give elaborate and extensive disclosures as to where will it be deriving its income from and where will it be spending its income. So once it is Sharia compliant, I can safely say if in Pakistan you read it is Sharia compliant, it is absolutely halal. Why? Because Sharia Advisory Board is constituted by SCCP and they are like qualified people sitting over there. They are genuine muftis and we can safely put our trust in their hands.
There is another question from Nivraz Khan. He's asking 5% share from RMC, 20% from strategic investor. That means 75% of the funding is from other investors in REIT.
Absolutely correct. 75% of the fund will be financed by the general public, and 75% of the units will be traded in the stock exchange.
There is another question from Taha Mir. He's asking, can a REIT scheme avail credit financing from a bank in Pakistan?
Credit financing REIT scheme, again, as I've already answered, it is any credit financing will be an unsecured credit. So, and banks are not very willing to provide any unsecured credit. So, it is up to the bank.
Okay, Umair is asking for some recommendations. Do you recommend any scheme to invest in? Also, should we invest in one scheme or diversify the portfolio?
You see, SCCP or people working for SCCP cannot make a recommendation for investment in any scheme because that will be very unethical and that would involve a conflict of interest. So we cannot recommend any scheme, but diversification, as we all know, is something which is always recommended, and the more diversified your portfolio, the more secure you are, and perhaps you make more gains.
Okay, Waqar is asking, is it compulsory? It's Ahmed Khan. He's asking, is it compulsory for all the REIT companies to be listed on the Pakistan Stock Exchange?
It is not the REIT company, it is the trust which will be registered. Yes, under the current REITs regulation, the units will be registered at the Pakistan Stock Exchange.
Taha Mir is again asking a question. Can the scheme assign its receivables in favor of the bank?
Sorry.
Taha is asking, cannot the scheme assign its receivables in favor of the bank?
Scheme assigning receivables in favor of the bank.
What do you mean by that? Like they are trying to monetize their receivables?
Taha, can you please further elaborate your question? I think by the time he elaborates, we should move to another question. Arsalan is asking, besides SCCP, what other regulatory bodies are working in Pakistan for which we need to get registered with for new REIT registration?
For any REITs registration, you need to have approvals from the land revenue authorities, the area where you are building the real estate project. You need to have a very clear title. The title has to be, the clearance of title has to be verified by a lawyer or a firm of lawyers, and then you need to have valuers who will be valuing the real estate investment trust property. The valuers are again, we have a list of valuers on the panel of Banking Association of Pakistan. So while investing in or while launching a REIT, you need to have clearance from the land revenue authorities as well as the valuers.
Okay, Umair is asking a question. Investment made by purchasing of shares in Pakistan Stock Exchange or for every project units are offered separately?
For every project, units are offered separately. Each scheme has to invest in a single project. The regulations are such that every REIT scheme will be investing in a separate project. So effectively for every project, you need to have a separate REIT scheme. Yes, a REIT management company can launch as many REIT schemes as it wants.
Till now, I think we are done with the questions. We should proceed further with the presentation.
This brings us to the end of presentation. That's all we have. I'll be like encouraging any further questions because the questions are really interactive and
There's another question from Umair Ijaz. He's asking, I wanted to ask, is there any system like IPO for REIT by which I can
yes,
system like IPO for REIT by which I can know about new schemes as they come?
all REITs units which are offered to the public are offered through an initial public offering, which is an IPO. So whenever a REIT scheme is offering its units, it will only be doing it through the IPO. So you can only subscribe to a REIT scheme through an IPO.
Arsalan is asking a question, how REIT business start in sense of land acquisition? Should one own the land already or it will be taken on lease or something?
Both the models are acceptable. For a development REIT, which is when you develop a land into a building, which might be an apartment building or a shopping mall, the real estate management company needs to acquire the land. It might also acquire the land on lease, provided the lease period is more than the time through which for which the REIT scheme has been launched. Alternatively, for a rental real estate investment trust, uh, again, you can have both the models in place.
Participants, we would encourage more questions from your side to get clarity on the subject. We would encourage if you people can come up with more questions. I think we're done with the questions. Yes, there is another question from Arsalan. Please also clear a clause of 3% of ROI on REIT units in your presentation.
Just a minute. A REIT management company can charge a maximum fee of 3% of net of investment for rental REITs and 1% to 3% of the initial fund size in case of a development REIT. The fee for a real estate REITs management company depends upon the performance of the REITs fund. It is really pegged to the performance of the fund. This is the same model that we have in Pakistan for the mutual funds as well. The mutual fund launching company, it will get its management fee as a percentage of the fund that it has launched. So better the fund performs, higher the size of fund, the greater will be the fee for the management company. So we have the same place in REITs regulation. REITs management company can charge a maximum fee of 3% of net for investment for any rental REIT. Whatever the size of rental REIT, the REITs management company can charge a management fee of up to 3%. It could be 1%, 2%, or 3%. This will be stated in the offering document of the trust. And 1% to 3% of the initial fund size for the development REIT. For any development REIT, which will, of course, be maturing after a certain period of time, the management fee is 1% to 3% of the initial fund size.
There are a couple of more interesting questions from the participants. Mohammed Munib Saeed is asking that is there any tax implication of investing in REIT?
Tax implication is there if a real estate investment trust distributes 80% or more of its income as dividend, they get a tax benefit in Pakistan. Any dividend which is less than 80% will not attract the tax benefit.
Usama is asking a question, what about other three companies units as they are not available on Pakistan Stock Exchange for trading?
Other three companies are in place, but they I do not know if they have launched any unit or if they have like applied for any unit. All I know is that as of today, only one REITs investment trust has got listed on the stock exchange. SECP has only cleared one project.
Daniel is asking question, what steps SCCP is taking to encourage more REITs to start working and encourage investment in the housing market in Jaipur?
First of all, this REITs regulations 2015 are very relaxed as compared to the REITs regulations of 2008. 2008 regulations were very stringent, and they even elaborated on where and how will a REITs investment trust will be investing. So it was something like 15% in a commercial place, 80% or 70% in a residential place. 2015 regulations are more relaxed. They are encouraging. They seem to bring about greater transparency, and we are even in the process of revising these regulations. And if you see SCCP's website, we have sought public opinion for real estate investment trust regulations 2018. So we are even like relaxing these regulations, bringing in new regulations based on our past experience, because for the last 10 years, we've only been able to bring in only one real estate investment trust. So we are facilitating the investors and the market.
Okay, very well said. Arsalan has just asked a question, minimum how many people can register a REIT?
It will be a listed company, so a listed company, 7 persons, of course. But I think the question is, he's trying to ask the REITs management. A REITs management company will not
Yes.
always be a listed company. It could be a public unlisted company. For public unlisted company, you could start a public unlisted company with 3 members. So public unlisted company, and it will then be launching the real estate investment trust.
Kashif is asking a question, REIT scheme is tax exempt, means investor will have tax saving by investing in the scheme.
Tax, I think my colleague Mr. Kumar would like to clarify.
Basically, you will be saved from double taxation. You will be taxed only once. Okay, so either you or the company will be taxed, not both.
Okay, fine. Mohammed Shoaib Farooq is asking a question, can a REIT issue preferential share and dividends?
It can issue dividends, which is a type of distribution. Preferential shares, no.
Okay, participants, with this brings us to the end of this session. The slides, the presentations, and the recording of the session would be shared with you people in following 2 to 3 working days. So that's all from our side. I hope this session was quite enlightening, and we are signing off from here. Thank you and Allah Hafiz.